From London, I'm Guy Johnson.
And from New York, I'm Bonnie Quinn. This is Bloomberg Markets. It is time now for Futures in Focus. Joining me from the CME is Alan Nuckman of Agora Financial. Alan, we got a lot of oil news today, and subsequently, and even before we got most of the news, we had that nice bounce for WTI. What is the market telling us?
We're finally seeing some firmness. Now, to make it simple, I look at crude oil as a global growth barometer that's been disconnected. The two other legs of that would be, obviously, interest rates in the stock market, which have done very, very well. So you've seen the crude oil market overshoot on the downside, but simply we're really at the 50 level. That's what's important to see how it acts and reacts. 50 is the bottom base. We traded between 50 and 60 for almost all of the last 52 weeks. Let's see where we are on a weekly basis. But I think the risk-reward is setting up for some of these overdone energy commodities and the energy stocks. If you look at something like Exxon's down 15% compared to the Dow up 15%. You can look at some January of 2021 options, some in-the-money calls, and position yourself for a healthy rebound there. Mathematically, to put the probability on your side. But I like the energy complex from a risk-reward standpoint here at these levels.
Obviously, the OPEC technical meeting is going on, but Alan, how much can OPEC drop output in order to meet current demand? And does demand recuperate in the future?
Yeah, I've been doing this for 30 years. I've learned to never doubt OPEC. Let's remember how they massaged prices to do what they wanted when they had that big IPO coming out with Aramco. So don't doubt OPEC's moves and motives. They can accomplish a lot. But again, as a trader, I look at this strictly technically, and the price reflects everything that everybody knows. I think we want to look to see if we can hold this 50 level here over the next week or so. We've got a little bit of a bottom base here today. But if we look at the overall market, obviously stocks have come back. They're not worried about the global slowdown, and we've also seen fear come out. The fear facts were now down to 16 in the VIX, which is the halfway point of this rally from 12 to 20. And let's remember, December of 2018, we were at 36 in the VIX. So even with that spike up to 1999, the market isn't as fearful as we might be.
All right, Alan, don't be too fearful. Alan Nuckman of Agora Financial there joining us from the CME.